So good morning, everybody. Appreciate you all getting on a Friday morning towards the end of September. Lynn reminded me this is, of course, the Friday for the end of National Small Business Week. Of course, National Small Business Week normally is in May, but like everything else, our world's been turned upside down or turned inward since we all are inside our homes, and we've had to do things a little bit differently. So the Small Business Administration, of course, is our primary funder, along with the state of California, with the Governor's Office of Business and Economic Development. Earlier this week, we were able to honor some of our small business award winners. We're able to do that. So you can see that actually on our Facebook page or on our YouTube page. And you can also still go to our website and be able to see some of those awards and see some of the neat businesses. So just one I will highlight is the Small Business of the Year for the San Diego and Imperial region was Cahoots, the pet food store. They're out of Ramona and have a really pretty good story. And so they were nominated, and they received the National Small Business of the Year award. And so we certainly appreciate the Small Business Administration, all the support they do for small businesses, and of course for our funding. Also want to thank for our Connecting with Capital. This is brought to you by some of our sponsors, which include Home Street Bank, Main Street Launch, CDC Small Business Finance, Marble Bridge Funding Group, and Primary Funding, the last two of which, of course, are on the call today. So my name is Danny Fitzgerald. I'm the Acting Regional Director for the San Diego and Imperial Small Business Development Center. Like I was saying, we're funded by the SBA in the state of California. And as such, we provide free business assistance. The main thing we do, of course, is one-on-one business advising. Today on the panel, you'll meet Esther, one of our fantastic finance advisors, who has a long background in banking and lending, but now we have her working on helping businesses, with the Small Business Development Center. And so we have a staff of over 100 people, just like Esther, that are here to be able to help you on a one-on-one basis, virtually or on the phone right now, of course. And of course, we have many, many different programs like our Connecting with Capital, different webinars, including our Adapt series, which has some best practices for you as you go through the reopening. And of course, we're happy that San Diego still is in the red tier for our business. So with that, I want to move on to our panel and let them kind of introduce themselves in terms of things as kind of, what's the organization you work with, the types of businesses you do or don't work with, and that type of information. We'll kind of go around the horn, then we'll come to Esther towards the end. Why don't we start with you, Andrew? You're in my upper left corner.
All right. Good morning, everyone. Happy Friday. My name is Andrew Krone. I'm Senior VP, Marble Bridge Funding Group. We're located in Northern California. We are a commercial finance company. We are a accounts receivable finance company, purchase order finance company, and contract finance company. So our client base essentially are clients that are receivable based. So we don't fund restaurants and retail. We do businesses that provide a product or a service to another business. And usually we can work with startups. The company is about $50 million a year in revenue.
Thanks, Andrew. Why don't we go to you, Pete?
Hey, my name is Pete. I'm with Lendspark. We provide business funding to all different types of industries, small and medium-sized businesses, particularly when they're purchasing equipment or they need capital for any type of reason. We're there to kind of help when maybe their bank isn't there for them or they have something else in the works. Thanks for SBDC for having us here. I'll pass on to the next.
All right. Why don't we go to you, Nick?
All right, thank you. My name is Nicholas Joseph. I'm Vice President of Finance at Alliance Funding Group. We're a small ticket direct lender. We typically help out small, medium-sized businesses with their equipment upgrades, but at the same time, we're heavy into franchise, whether it's a startup yogurt shop or a pizzeria or any of the major brands that you might see, McDonald's, Burger King, Little Caesars, but also, we finance healthcare, manufacturers, construction, also provide working capital. We're good product when traditional sources have trouble placing funding. we're a good resource for it.
Awesome. And Ruben.
Good morning. I'm Ruben. I'm with Cardiff. I'd say right now, our most valuable product offering is getting cash and lines of credit in the hand of small business owners very quickly without collateral.
Fantastic. And Fernando.
Yeah, good morning, everybody. Fernando Ponce with Primary Funding. So we're a San Diego-based asset-based lender, 25 years here in the market. So we're going to specialize really in factoring, PO financing, lines of credit, and short-term bridge loans. Primarily, it's going to be B2B industries, so accounts receivables, government contractors is a big one for us lately that we've been focusing on as well. Thank you for having me.
Fantastic. And Esther, why don't we come to you and kind of, if you can introduce yourself and talk a little bit about what you do as an SBDC advisor.
Thank you, Danny. Good morning. My name is Esther Carrillo. I'm one of the business advisors for the South San Diego Small Business Development Center. We offer technical assistance to all small business. We do startups, we do marketing, we do HR. Me in particular, I do the access to capital assistance. So when you come to me, I work with a lot of the partners that are on the webinar, and we try to make it as simple as possible when you're trying to access capital. But before we do that, we need to create a business plan. We really need to dive into your idea or concept. So I'm very happy to be here and answer any of your questions.
So fantastic. And so want to kind of go back around the horn here in terms of things. And so, if you could kind of talk a bit about, you introduced a little bit about the types of loans, but, kind of be more specific also in terms of, if there's any fees that are there, as well as a little bit on what the application process is like for the businesses, and and how long they have to be in business, or if some of you I know work with startups. So why don't we start with you, Ruben?
Sorry, I was pressing on mute. So our application process is right now, I'd say we're averaging about 30 minutes an hour on approvals up to 250 grand. Regarding fees and interest, that's actually a really big benefit of Cardiff. We don't have origination or processing fees on probably about 90% of our transactions. That means you don't pay any fees, processing, doc, anything. Funding is usually done either same day or next day. I'd say, you can come in today, you can come in Friday morning, and you should leave with the money wired to your account by Friday afternoon.
Awesome. What about you, Fernando?
Yeah, so our process does take a little bit longer. We tend to collect, a financial package up front, which is AR aging, AP aging, some current financials and bank statements, and a basic application. Typically, our review process is about 2 weeks from start to finish to actually getting you funded. And for the most part, as far as fees go, once we do our initial funding, we typically do charge a 1% origination fee on any factoring or PO lines that we put together. And then as far as rates are, it's just going to be a percentage of whatever the invoices are. So it really depends on volume and who you're selling to at the end of the day. But it's usually a small percentage, around 2% of an invoice or something like that.
Great. And Pete.
Yeah, so our two main products, equipment financing, so think buying a work truck, dump truck, any kind of construction equipment, and then cash, both have an application process and turnaround, usually 24 hours to get you an answer and an approval. With the cash, it's a little bit quicker of a funding process, usually same day, next day, kind of how Ruben highlighted. And with the equipment, usually 3 to 5 day turnaround. As far as the types of businesses, I guess, and the time in business, we typically like to have about 2 years right now. During COVID, we're not working with startups, but typically we do on the equipment side. With the cash advance, it's all in the working capital. It's really revenue based. So as long as you have a couple months in business, we should be able to get you something. And as far as fees and anything with the application or anything up front, we don't charge you until, obviously, we fund something for you.
Andrew.
All right. The underwriting process, a lot of it is done by me. So if we have a phone call together, usually within that phone call, I can figure out whether we can help you or not. We're sort of consultative based in our funding. So if we are going to get together, I will spend a couple hours with you, demystify how accounts receivable finance factoring works, how we will work with you, cover every subject that you would need to know to help make a decision at your end of whether this is a good fit. And we do the same thing at my end. If at that point we both want to go forward, we will gather a package from you, and that would consist of financials, bank statements, probably some tax returns and things typical that you might see with a bank. That's mainly because if we're going to do this, we want to make sure it's the right fit for you, and we want to understand your business so we can help you in any way possible to help grow the business. We have no minimum, so if you're a client of ours, you do the funding, not us, and we can easily do up to $5 million a year. We have an application fee, depends on the size and complexity of the business. A real startup might be just $350. Again, we don't take the fees until we've gone through everything else to make sure we're both happy about what kind of relationship we're going to have and how we're going to go forward. And at that point, usually the clients are just ready to get it going. Once we gather a package, we're usually, if we get it, let's say on a Monday, we could have you funded by Friday. So it's a pretty quick process. But we covered everything very early in the conversation, so we know it's a good fit, and that's why it moves so quickly.
Fantastic. And Nick?
Well, we do fund startups. We're happy to help out with that. We don't focus on it, but when needed, we'll be there. Typically, we look for 2 years' time in business. Our application process typically takes 24, 48 hours. The working capital product we offer, does turn around a lot quicker. As far as equipment financing, I'd say 24, 48 hours to get approved, and then another 24, 48 hours to get documents out and parties paid. As far as fees or origination costs, we are a direct lender, so there's no additional fees or origination costs applied. And whether it's, somebody who's just upgrading some old outdated equipment, or somebody's expanding or working on a new project, we're there to help out.
Great, thanks, Nick. And then coming back to Esther on kind of the work that you do, because as you were talking about being an access to capital advisor. So how do you really help clients obtain funding? Kind of be a bit more specific, and how do you work for them on with lenders on their behalf?
Okay, so when a client comes to our office, we sit down with them and we really try to understand what the loan purpose is. Because typically when you're starting a business or when you've had a business, people say, I need a line of credit, and that might not be the case. So we really get to understand what it's going to be used for, and then we help you package it together. We get all the financials, we help you fill out the forms, and then we determine which is the best lender for you, right? I mean, we don't want you to be calling your bank. Maybe you're not eligible for your bank. Maybe you need to do alternative lending. So we really help you package your loan idea first, and then we find a lender for you. So we do all the financial analysis to see, because sometimes you might not even qualify or you might not be ready. So we do all that before we refer you out to a specific lender.
Thanks, Esther. So the next question I'm going to ask is actually fairly similar to the question Lee Barkin put in the chat about kind of on how you really are basing lending, because I know some of you are certainly lending based on revenue-based financing, which is certainly a component of things as opposed to, and so as a function of company revenue, but that's a little bit different, I know, than some of your models, but you are doing it based on the revenue-based. But really kind of what is, in terms of the underwriting process, Andrew, I know you talked on it a little bit and a couple of you have, but a little bit more detail in terms of what that is. And why don't we start with you, Andrew, since I know you've already kind of answered half of this question.
So from an underwriting process, the clients that come in, we see contractors, we see startup companies, we see engineers, architects, staffing, companies of various types. So from the detail of the underwriting and the initial phone call is just to quiz you and sort of hear your story about where you are, where you came from, what your knowledge is of your industry. and where you're headed and what you're looking for. We're trying to make sure at our end that you're not really bank financeable, because if a bank is a better solution, we're going to make that call to you and explore that. If they're not the best solution, we have a lot of companies that are doubling and tripling in revenue that come to us and they can't get enough bank financing to fill that void, or they had, you know, something with COVID and financials are weak, and the banks won't look at them for another year. And of course, in this environment, it's a lot harder to get bank financing right now, and probably going forward for, who knows, next 3-6 months until things settle down. So from our end, it's really a question of understanding your revenues and seeing what you understand your business, your margins, and client base, and putting all that into a package. And then from my end is to explain to you how we would work and how the financing will work. Typically in our world, real simple, is we give you cash flow. So when businesses are growing and they're a B2B model and they invoice other clients, they're waiting to get paid 30 days, 60 days, 90 days on their receivables. A simple example, I just brought on a client that was involved in all the fires in California, and they are a staffing model, and they had 60 guys on the ground, and they had a problem because they thought they would get paid faster from CAL FIRE. Turns out they got to wait for the fire to be out and cleaned up, and then they invoice, and then they get paid. And meanwhile, they had payroll weekly. So they were burning through their cash, and they had no cash flow. So we worked out a solution for them to get the cash flow as they needed it with the invoices they were submitting. $100 invoice typically would get an 80% advance. You get $80, and when the $100 pays, Marble Bridge gets paid back the $100. We keep the $80 to pay ourselves back, and then we take a fee, and the fee is a discount off the face value of an invoice. So factoring is basically a fee off the invoice that you're submitting, and if you don't submit an invoice, there's no fee. So in this way, you don't have to wait until your invoices pay, and that way you have cash flow with payroll, you know, take a deduction or a discount from your vendors, and be able to plan and grow a lot faster. That's it.
Thanks, Andrew. And Nick, can you talk a bit more about you know, your underwriting process, what your lending decisions are based on, revenue, cash flow, et cetera?
We're more of a credit-based lender, so we'll look at, you know, personal credits, business credit, whether it's Dun & Bradstreet, Business Experience, PayNet. We typically look for comparable credit or just good credit history. You know, our process is pretty simple. If you'd have a 650 and above, 2 years time in business, looking for anywhere from 100 to 250,000, we can likely structure something for you guys. Anything above that, we do have to get a financial package, put that together. But primarily, we're just looking at, you know, people with decent credit, some decent bank balances, who can support the payment and are picking up, you know, decent collateral, whether it's, you know, IT equipment, kitchen equipment, construction equipment, vehicles. And we're primarily looking at the collateral and just, you know, credit driven for the most part.
Perfect. And Fernando, same question.
Yeah, so our underwriting, you know, really varies depending on what type of product we're doing. Very similar to Andrew. I mean, if we're doing factoring, we're really basing our decision on who you're selling to, right? So we're going to look up the DMV profile for that company. If it's a larger, reputable company that's been paying their vendors in a timely manner, we're going to have a much easier time getting, you know, a PO or a factoring deal done, regardless of what the business owner's credit is or what their cash flow looks like. When we're going to more of a, you know, a bridge or a bridge loan or a line of credit, now we're really are looking at financials. We want to see that the company has good cash flow. We want to see that the, you know, the business owner maybe doesn't have perfect credit, but, you know, they're making their payments on time for the most part. You know, maybe there's been a few hiccups, but that are explainable. But we want to make sure the company is a little bit stronger and the quality of the financials are a little bit better when we're looking to do lines of credit. And then when we're doing bridge loans, it's really just what is our takeout, right? What is the liquidity event that's going to happen in the next month or, you know, 6 months that's going to allow us to take out our loan and be made whole at that point. An example of that, we had a client we were working with about a year ago that was working with the Department of Ag, and they had received a grant for $1.2 million. They needed some of that cash up front to mobilize. And so, you know, it's not something we're going to be able to factor because it's way too far out, but we provided some capital in the form of a bridge loan. And when that grant was paid, it took out our loan and we were made whole, right? So we were able to structure that in a way that it made sense for them. So really just depends ultimately on what we're doing for the client, but you know, depending on where they are at as a business, we can be pretty flexible on how we approve them and what underwriting process we use.
Great. And Ruben.
So we have two boxes, I would say, for underwriting. The first box we have is our traditional underwriting. Factors that determine risk. FICO, credit score, business credit, time in business, references, the basic criteria that all lenders use. I think that unlike traditional, you know, the Wells Fargo of the world, we don't look at all these financials. That's our traditional box. Then there's Ruben's cowboy box. And Ruben's cowboy box is, I'll tell you a deal I just did. A customer that comes in has a 560 FICO score, has never borrowed any money in his life. Let's just say his background check ain't too hot either, okay? He's had his history. What I'm trying to avoid when I can actually put my own money into a transaction for a small business owner. That could be 10,000, 20,000, 5,000. And what I'm trying to avoid is an immediate default. Because if I lend someone $10,000 and they stop paying me after 90%, well, it's not the biggest loss. But if they stop paying me after the first week, it's a big, big problem. So on these higher risk files, what I'm trying to understand, because many business owners have higher risk files. COVID has made people's, just like in 08, they're leveraging their credit cards right now. People are maxing themselves out. These are common things. Their scores are going down. So what I'm trying to determine is, what is the plan for the money? How does this money help this business? And is there a general plan? Does that mean that that actually works out all the time? No. I've had a lot of defaults, just like everyone. But when we go into the higher risk program, we just want to make sure the business owner has a plan for the money and a reasonable plan at that. Now, the good side is, and I kind of play sales and underwriting, we're able to get a lot of deals funded that I think normally would get declined because they don't pass the smell test for normal underwriting, but they still make sense. So that's, I think, you know, that answers. We have the two boxes. We have the normal box and the high risk box, as long as it makes sense. And the reason being, we're giving business owners a lot of cash on an unsecured basis. So unlike a real estate loan or an equipment loan, we have no collateral. So that's kind of how we underwrite. And we talk to a lot of our customers, and you know, it's a dual-sided sword. On one side, if we hear something like there's business owners where we're interviewing them and we're like, this passes the smell test, but there's no plan for this money, we're not going to fund this deal. And then on the other side, it's, well, this doesn't pass the smell test, but this business owner actually has a plan, and we'll fund the deal.
Awesome. And then coming to Esther, you know, there's been some different terms and things like that. And maybe you can, since obviously that's our role, is to be able to help the business owner. You can talk a little bit about things like debt service coverage ratio, cash flow, as well as what is a personal guarantee.
Great. Okay, a personal guarantee, it's, I mean, if you're doing an SBA loan, typically all SBA loans will require a personal guarantee, and all it is it's a personal liability on a loan on behalf of a business. So if you have a business and you believe in your business, doing a personal guarantee wouldn't be a big concern. Unfortunately, all SBA lenders will require you to do that. Now, talking about debt coverage ratios, the easiest way you can, that I tried to explain to a client is the ability to produce enough cash to cover its debt. That's just a very generic overview of it. Obviously, when you come to our center and we do a one-on-one, we can dive into it more in your specific situation. Now, what everybody's mentioning here, all of our lenders, cash flow. Cash flow is the most critical aspect of anything. If you learn something today, cash flow is, you know, critical. And I just give a very simple meaning to, I mean, an explanation to it. It's just a snapshot of the amount of cash coming into the business from where, and the amount flowing out. So you need to have enough cash flow to cover your, your debt. So that would just be like a simple explanation. Obviously, when you come in, we will look at your specific financial situation, your business situation, to determine if you're even eligible to apply for one of these lenders. We would do a very thorough financial analysis of your current situation.
Thank you, Esther. I know that's a common thing, is just making sure everyone understands, and that's really what the SBDC is here for, to help folks understand what this process is and interpret the different terms that, as you have to navigate the lending. Ruben touched on this, and I think, we certainly it's all forefront of our minds in terms of how COVID-19 has impacted all businesses, but also, the lending landscape and what's really coming about from there. You're obviously adapting some of your models, and Ruben certainly talked about the way in which he's adapting some of his. But if each of you could touch a little bit more on that, now that we're into month 7 of the pandemic and have a while going, if we could talk a little bit more about that. Well, actually, since you already touched on it, Ruben, we'll go ahead and start with you.
You want me to start with it?
Yep, since you already kind of went halfway there.
Yeah, I mean, I'm a child of 2008. I started my career in 2007, and I saw the world blow up. So, I mean, that memory faded for a long time, and I think that memory for people that grew up during that is coming back. I'm a firm believer that, and I'm here to lend money. That's how I get funded, how I make my living. I'm a firm believer that COVID has changed the landscape completely. And I think we're just starting to scratch the surface of it. Let's give an example. We live in a credit-based society. So let's say we have a construction company and they're on net 30 terms with all their vendors, or 60 or 90. And sometimes they get behind, but the guys who sell them products say, hey, look, I'll give you 30 days. Don't worry about it, Joe. Well, now a lot of those guys aren't saying, we'll give you another 30 days. We won't do that. What does that mean? That means their business credit might be bad. Their DMV might be bad. It might show bad payments. People are negotiating leases. Do you give someone money who's reduced their lease by 50%? And how do you do all this stuff without pissing off customers and still staying competitive? So I think how COVID has impacted me is that I really need to understand businesses faster. I don't need to look at financials. I don't need to looking at a 2018 tax return doesn't tell me anything about the business anymore. It doesn't. That was 2 years ago. There was post-COVID. I mean, it doesn't tell me anything. So where I'm right now, I'm gleaning the best information is having a 10-minute conversation with customers and taking a real interest in their business, understanding what their plans are. One of the key questions that I ask customers are, what are your sources of liquidity if COVID has another outbreak? And sometimes customers will say the truth. They'll say, hey, we don't have a plan. And that's okay also. But I think that's how I'm approaching COVID is I'm thinking that this thing's here to stay for a while. And so you must understand not just the last 3 months, but the next 6 months. I have no interest in looking at anything of 2018 or tax returns because, like I said, for me, it's like looking at someone's credit report from 2 years ago. It doesn't say what's going on now. On the positive note, there are a lot of opportunities for small businesses right now. There are deals to be done. We have a lot of people who are buying inventory at discounts, buying other businesses, taking over market share. So there's a lot of positive things here, but I think the way that Ruben has changed is I really want to understand what the business owner's plan is for the next 6 to 9 months.
Thanks, Ruben. What about you, Nick? How has COVID-19 impacted your business and some of the stuff you're seeing?
Well, going through 2001, going through 2008, I feel like we're prepared to go through what we're going through now. We're heavy into restaurant, we're heavy into hospitality, we're heavy into fitness. All of those have been impacted, but we're adapting and we're doing our part to still service our clients, but at the same time still provide, financing for new startups or guys who are going through growth or development. Where we've been impacted is we're still funding, but we're just not doing it at longer terms. We're still comfortable with taking the risk with working in those markets. Just, rather than doing a 5-year note, or excuse me, a 7-year note, I'm doing a 5-year note. Or in smaller projects where I was doing a 5-year, I'm doing a 3-year. Or right now we are sometimes asking for security deposits, whether it's 10 or 20% down for startup. We're doing that so we feel comfortable dealing with the risk, managing it, and still getting funds out. You know, we see a lot of opportunity as well. There's certain business essential services, whether it's automotive repair, a lot of these Serpros cleaning companies, they're doing well, and we're providing, you know, more capital, you know, for those guys when these projects come up. So I guess we're just adapting. We're not restricted, we're just limited. And then as far as with COVID and everything going on, and still servicing our clients, you know, we are experience a few delays in turning things around and processing, but for the most part, you know, 3 to 5 business days to get funds out. But you know, we're comfortable in this space. You know, we're 100% behind this country, and you know, we're going to manage this thing together. And we just got to do our parts and, you know, be there for when things come up.
Thank you. And Fernando.
Yeah, our underwriting, you know, has not changed a ton. I think we definitely are a little slower in coming to a decision, obviously, because there are more factors that need to be taken into account now. You know, one of the big things for us now that we really look at is just the operator, right? And the business owner themselves. What types of changes are you making to right the ship, right? If things are going in the wrong direction because of COVID, how are you adapting as an owner? And then ultimately we want to, you know, it makes a big difference when we talk to you and we have conversations, you know, and this kind of goes back to Esther and the SBDC, right? And preparing you for applying for things, right? If I ask you, hey, what was your profitability last year? What did you know, why are your gross margins compressed? Things, I mean, little questions like this. If you as an owner have the ability to respond to me and you actually know your business and you know the numbers, that's going to make us far more comfortable in being able to get a deal done, right? If there are some questionable things in the financials, if you understand why you're having these issues and what's happening other than just, you know, well, COVID happened and you know, because of that, I'm not doing as well as I was before. Okay, but what specifically is going on in your business? What did COVID do specifically, and what did that lead to, and what was that chain kind of effect, and how did we get to this point, right? And then, because once you know that, now you know how you're going to fix it, right? And so that definitely carries a lot of weight ultimately in, you know, how quickly we want to move with deals, the size and how much risk we're willing to take. Obviously, we're going to take risk anyway because that's the industry that we're in as an alternative lender. But how much risk we're willing to take is also going to just fall upon how comfortable do we feel with that owner as an operator of the business and their knowledge around what's happening to their business and how they're going to right the ship. So definitely, you know, you want to come prepared when you have these conversations and, you know, be honest about them, because we're going to find it, you know, we're going to find out everything, you know, all of the issues that are there, we're going to find it. And it's better to have that conversation up front. And for me as a lender, know that you are giving me the full story and that you're giving me the reasons how you're going to mitigate these issues, as opposed to just hoping that I don't figure it out and know that you're in trouble or know that there's problems with the financials.
Thank you, Fernando. And Pete, what about you? How have you been looking at things kind of during COVID and as you look forward to post-COVID?
Yeah, kind of like the same thing that everyone said, is really having a conversation and not only understanding really why you want this $100,000 for your business, but what is the plan? Is there, you know, maybe a Main Street loan 2-3 months out in the works that you know is going to take us out? Or for instance, really digging into a deal, and more recently on a food truck transaction, we were able to get it over the hump. As you can imagine, in COVID, the restaurant industry, food truck industry has been hit pretty hard, and it's tough to get loans approved. we were, just through having a conversation, what are you going to do with this truck and what exactly, we got the contract for, up in Portland where he's going to park it in the square there 7 days a week. He's the exclusive, right to sell tacos and burritos, and, got his monthly rent for the spot, and really looked into the file, and we're able to get an approval where I can say probably the last 5-10 food truck deals were really difficult. We probably had to pass on, and this was the difference on that transaction, is getting to know it. Or, maybe if you have a situation where, hey, it's COVID, cash flow's tightened up, but we, through conversation figure out, I have this rental property I own free and clear up in Napa Valley. And oh my God, now we can pull 100 grand out of that and problem solve. But it's all about just talking, kind of being open, and just having a conversation. Because just because we underwrite the file and the business can technically afford a $50,000 loan or can afford this, that doesn't give us a good enough reason to give it to you. We want to know that you have a plan.
Thanks, Pete. And coming to you, Andrew, kind of your business and how you've kind of pivoted a little bit in the COVID world and as you look forward to.
All right. Well, been doing this with Marble Bridge underwriting and working with businesses for 20 years now. So like some other people have said tonight, that you've gone through these cycles, these up and down cycles, 9/11, tech crash, the real estate problem. But this is something new that none of us really as lenders have ever gone through. It's almost like a World War III because it's affected everybody in the world. That being said, I think the retail industry, hospitality industry, I think it's pretty obvious. B2C model's been hit the most. So from what I can gather, and just giving you my viewpoint in the marketplace with the hundreds of bankers I work with, they all have to take COVID into consideration and all do making loans. And again, lending has slowed down quite considerably from traditional lenders. Historically, in these marketplace, lenders, especially like Fernando and Primary and Marble Bridge, this is when we start growing dramatically because a lot of companies did take hits or they did lose some revenue during those periods. And in the coming months and year, the banks are going to be renewing loans and not renewing loans, and there's going to be a lot more people looking for alternative types of financing. We, as a company, haven't really changed at all in our underwriting. I mean, I'll talk about COVID because it's a topic we're all interested in, but it has not affected our underwriting at all. It hasn't affected our account base. We haven't had any accounts go under. We haven't had any accounts go under in the last 3 years, to be honest with you. So they've been all very strong. They've grown, they've graduated using our services, but we will become a more essential lender in the marketplace for the receivable-based businesses. And the business world itself is adjusting to this. So there are huge opportunities out there, and I'm seeing companies. I talked to one yesterday. It's an amazing little business. Got some money, the backer, to get going, and now she's trying to get the contracts out there with major corporations. And it's something, if I discussed it on screen, we'd all say, that's a brilliant idea. So there's all sorts of opportunities to take hold in this new environment, but there's a lot of uncertainty for all of us because we just don't know where COVID's going to go and where, things will go next year. But as far as we are a lender, Marble Bridge, we're able to handle this and absorb it. And so far, there have been no hiccups. And so my timing, my underwriting, my discussions with my clients is the same, just like it was before or after. I just expect, though, within 6 months, we will see a huge wave of businesses that are going to be looking for our types of services because there'll be just less out in the marketplace. So I think that's the trend right now, is less traditional lending, more untraditional lending will be the future. And the only thing to add to that is I can't say what the government's going to do. I guess the final piece of this is the government gave away $1 trillion to small business. That saved a lot of people. I've talked to a lot of businesses since that has happened. Without that money, they all would have gone under. So that's something new in the landscape, and it's hard to say if we're going to see more waves of that in the future. My bet is we will.
Thanks, Andrew. And Esther, I'm going to come to you, kind of talk a little bit about, certainly with COVID-19, I know, what Andrew was referencing in terms of all the loans of PPP and of course all the, the Paycheck Protection Program and the EIDL, the emergent, the Economic Injury Disaster Loan programs from the SBA that I know you helped hundreds of businesses with. But now that they've received these loans and, and moving into different components, what are some of the other conversations you're having with small businesses as they, are still looking for capital, and what are some of the tips that you're giving them?
Okay, well, we have helped a lot of clients, to have access to those disaster loans. And now a lot of our small business clients are being very careful, right? They're like, let's review the financials and make sure that I'm reducing costs, that I'm not just throwing away money, every month. So they're very careful as far as budgeting their businesses. What I am seeing a lot is they're like, can I redo my business plan? I need to pivot my business. A lot of, if you're in retail, and if you didn't have a retail online store, well, now would be a great time to have it. So a lot of our clients are thinking outside the box. A lot of them are also monitoring their credit more than ever, because a lot of the lenders that we have are credit-based lenders. I also have other clients that are like, let me start up a new business. COVID or not COVID, they're still in business and they've been in business for 20 years. So they're always going to stay in business. So I'm actually surprised with a lot of the new business, that are calling us and saying, hey, I'm ready. But everybody right now is just, staying strong and just being very proactive. And the business planning to me was a shocker, that they're like, I've had a business for, 10 years. Let's redo my business plan. And obviously we have a lot of those resources to help you and make sure that, it makes sense and that the new business is going to be successful. I wanted to add a comment about alternative lending. There's still money out there. We do have great lenders in town that are doing startup lending, but obviously you need to be prepared. You will need to come to our center so we can sit down with you, get you prepared, make sure that the concept or idea makes sense and that you're credit worthy. So now more than ever, it's critical that you use the Small Business Development Center.
Awesome. Thanks, Esther. And so now I want to kind of shift to a positive. So if you could tell each of the lenders, tell me a story about, someone you helped. Pete, you gave a great example of the food truck, and I'm sure you've got other examples as well. And so if each of you could kind of talk about a particular success that you've had, of helping a small business lend recently. So why don't we start with you, Nick?
All right. Right now, I'm getting a lot of requests for working capital and operating capital. I'm getting it from a lot of franchisee owners who work in, I'd say, like the dessert space, whether it's edible arrangements, Baskin Robbins, all these other guys out there. We're basically, allowing them to access lines of credit for $150,000, basically to get them through the winter. A lot of these guys like to get prepared in advance, secure these lines, know that they're going to experience slower months, and get through them. That's working out really well. At the same time, I got startup Dairy Queen owners who have really difficulty getting funds right now. A lot of guys aren't lending to restaurants. A lot of these guys are having to come out of pocket, pay for it, and then a few months later finding the need for working capital because all their cash flow, all their investment, they paid out of pocket. We're helping out a lot with those scenarios. We're providing 5-year agreements so they can get through, get established, make their money, pay their fees, and keep marching. Where a lot of sources are guys who've hit exposure, their bank won't lend to them anymore. We're happy to help out and facilitate those needs. These things come up a lot. We do maybe, I would say almost 75 to 100 transactions just in franchising each month. So our success rate's really high. If you guys want to check us out, alliancefundinggroup.com, or reach out anytime. I'm happy to pass on testimonials as well.
Great, thanks, Nick. How about you, Andrew? What's a success you can think of right now?
Yeah, last week we just funded a client for $250,000. I alluded to this earlier. We got referred over from a bank And it's one of the biggest banks in the US, won't mention their name. They didn't even look at the financials. They just said, we're not lending right now, call Andrew. So that's how I got the referral into it. And this gentleman had bought a staffing model a couple of years ago, was still paying on it, had a notes payable, had no bank line of credit, was making money, had grown the business, so that all looked good, sort of good. So we had some discussions about why he wasn't talking to a bank a year ago, and trying to figure out where his head is at. Looked at his financials. He had a CPA. He had a bookkeeper with a CPA that he inherited from the last company, and the financials were wrong. So he paid that CPA and bookkeeper $10,000 a year for that service. So part of my analysis was, you're not getting your money's worth. And if a bank saw these numbers, you would have a problem getting a loan to begin with. And if the goal here, ultimately, if I'm going to fund you, I want to get you stronger, so you run your business better and you can get to graduate from us eventually and get back to a bank. Then the reason why he sought us out, he was able to get and bid on a staffing model. Well, what he does for CAL FIRE. So all these fires that were all breathing the smoke in the last so many weeks all around the state of California. And they hired this guy and his staff's on site 24 hours a day, 7 days a week. And so PPP money he got, and he was using some of that money to keep the guys paid on the weekly payroll that he had to commit to. He had to move to a bi-weekly payroll, which he was going to head to. Came on our way because the bank said no, they didn't want to look at it, and it came our way. He needed money in about 8 days. So even from a bank perspective, that would have been very difficult, if not impossible, to get him line, even if he walked in the door. And so I got involved with him, sat down, we went through all the numbers, talked about his business in detail, educated him on our approach, how it works, how he's going to use us. And he slowly got into the financial aspect of it, because he admitted that's his weakest point in running a business, is understanding the financials. And I said to him, he's got to become an expert in that if he's really going to make it and grow from 2 to 5 million. And this is an opportunity to grow. And we got the deal done. We funded him. He was happier than a lark. He was able to sleep because he wasn't really sleeping much, wondering when he was going to have money for payroll because he was going to run out of cash. And now we got him to switch financial representation. So he has a CPA who's totally redoing the books right now. So he has those accurate, and that's making him even better. And now we're talking about, how he's figuring out his staffing model, his margins and all that, and how we play into that. And so he's using me more than just a funder, which a lot of people are in our industry. He's using us as a consultant, and we're helping him get beyond that point now. And now he's doing a lot better, and we got him covered. We'll probably have $1 million out before he sees his money. But the biggest thing is he was able to make the move, and he's so happy he found us, and he's really feeling comfortable and good about everything. So that's a really good success story.
Thanks, Andrew. And Pete, you already told us a great story about the food truck. I'm sure you got another one.
I got another quick one for you guys. Customer actually came to us yesterday afternoon, just telling customer we were able to get them approved this morning for very low mid-single digit rate financing for just a brand new 2020 GMC truck. And basically just put it in the business name instead of his personal name. He was at the dealership. He could have done either or. There's various benefits to putting it under the business instead of your name, if you can imagine. So it's just a real quick and easy example of like some of the types of funding we can do if, putting your work truck in the business name.
Awesome. Thanks, Pete.
Hopefully have it funded Monday. Thank you again, guys.
Fernando.
Yeah, we actually had a great one we funded last week. This was a client I've talked about before on one of these events here, and they had originally been sent to us from the SBDC. We helped them with a factoring line to do some imaging for the power companies. We had successfully graduated them over to a bank, and they'd gone out of our program. They had acquired traditional bank financing. Well, within 6 months after that, they acquired a huge contract. And last week they came back to us and asked if there was any way we could help them because they outgrew their bank line. Good problem to have, I guess, right? But they actually ended up submitting invoices to us for $1 million that they're going to be doing every month right now over the next year. and their line of credit at their bank just, you know, they couldn't grow them fast enough, so they had to come back to us. So that was a really good success story of a company we were able to graduate onto a bank, and then they did so well, they outgrew their ability to get traditional financing and had to come back, which is, you know, I mean, ideally you'd want to be able to stay with a bank, but that's just where, you know, companies like ours are very good, is we're able to scale very quickly because we're basing what we're doing for you on the contracts and the receivables coming in, as opposed to what you've done historically, right? So when the company had done a couple of $1 million historically, and now they're going to, you know, triple what they were doing in revenue, we're able to grow with them and help them, and then eventually hopefully get them back to the bank again for a larger line when it's time for that.
I'm having a little internet trouble, so if I'm I apologize for that. Ruben. There we go. Now I've got a little internet again. The joys of home internet, everybody, as we were talking about pre-COVID issues. I want to go to you.
We couldn't hear you. Who are you asking to talk?
You, Ruben. Sorry, I'm having internet troubles here. So fortunately,
No worries. I just want to pick out a turn. Oh yeah, so I mean, I'll share who we helped yesterday. I have a customer who I've done some equipment financing for. They're in the stone business. They took out a small loan from us during COVID just to make kind of their family feel secure so they wouldn't run out of cash. A gentleman called me the other day and said, hey, Ruben, there's a lot of business in my industry that are going under, so I want to open a second location. He also gets huge, and I think this is one thing we talk about opportunities. A lot of small businesses right now during COVID, there's massive, if you're buying inventory for your business, there's massive discounts. So at least for a lot of my customers, if they're buying product in bulk or from overseas, they can reduce their monthly costs by an average of 30 to 40%. So if they're spending $100,000 a month on inventory, instead of buying it from a local supplier, if they can buy it in bulk, they save 30 to 40 grand. The problem is getting that 60 grand or 70 grand up front, just getting it quickly, especially if they don't have the best credit. And so we refinance our customer's note. We gave him a better deal than last time. Very happy guy. Couldn't be more pleased. Easy and out process. So I guess that's a good example of the customers we're helping. We actually did, I did personally 3 refinances yesterday, which are customers who have said, hey, look, like I go back to the idea of having a plan. If there's a plan for there's cash, most of our customers actually repeat with us. We give them better deals to retain their business the second and third go around, and they grow their business. So yeah, it's a good example of someone we're able to help, and everyone was happy. We're happy, the customer's happy, everyone wins. That's what we're looking for, is something that where everyone wins, where no one feels like they get kind of the short end of the stick.
Perfect. And to kind of wrap things up, Esther, why don't you talk about a success story you've had with the SBDC, and then that'll kind of wrap us up a little bit here at the end.
Great. Okay, so typically we get a lot of referrals from a lot of our business partners in the community. So before COVID, I received a call. I got a referral from Home Street Bank, and he said, I'm referring you a client who's applying for a commercial loan. He's very, he doesn't understand the forms. You know, when you're doing an SBA commercial loan, the forms tend to be very involved. So luckily for this particular situation, I used to be an SBA lender. So the client came in, I helped him fill out the forms. I asked him a lot of questions. I got a lot of the financials, and then obviously, he didn't know anything about business projections. I was able to help him with that. We packaged it together, and I was super happy. The client actually did have the 10% for a commercial SBA loan. It funded, you know, obviously before COVID, and it was a $550,000 SBA loan, and it resulted in 5 new jobs. And the client was super excited that, you know, it was a very simple process, because you know, he just sat there with me and I helped him fill out the forms, and He actually called me now recently that he's trying to buy another commercial building because the business that he has is construction. Obviously, you know, it's not having any issues, right, because of what's going on. So I'm going to be able to assist him again, right? So that's what we do. When you come to us, we're trying to build the relationship as well. So that one, I was very happy that to me it was really easy to do, and the client was very, very happy.
Fantastic. So we're hitting the 10 o'clock hour, and I want to thank everybody, in particular our panelists. I want to thank Ruben from Cardiff, Pete from Lendspark.
Like we lost you, Danny.
I thought Zoom stock was really expensive. They should do a better job on this stuff.
It looks like we lost Danny, everybody. So
Is it
we just,
is it
excuse me?
yeah, I was wondering, is it possible to get a list and phone number and email address of the contacts for lending?
Yes, I will send that out this afternoon.
Okay,
Yeah, and the
thank you.
SBDC can contact you. So the contact information for the SBDC is in the chat room. It's www.sdivsbdc.org. And I really implore you all to contact us. We can definitely get you in contact with all these lenders, but we can really help you manage your business better.
Well, I'm already a client. I just need the list.
Contact your advisor too.
Okay, I will. But can you send the list
You
this
will,
afternoon?
yes, you will get the list. But
Okay.
your advisor can also help you work with these lenders because they have relationships with them.
Okay.
All right, all.
Thanks, everyone.
My internet issues, and I thank everybody. We've hit the 10 o'clock hour, and I think Lynn was summing it up great. Best way is to reach out to your SBDC advisor if you have one. If you don't, reach out to schedule an appointment, and we can help you find the lender that works best for you. And so again, thanks to all, and to everybody except for my home internet provider. So have a good day.
Thanks, Dan.
Have a great weekend. Thank you.
Good weekend,
Bye.
SBDC, everybody. Have a good weekend.